Imagine buying a stock on day one. The bell rings, the headlines scream, your phone lights up. You feel early, smart, special. Now, imagine this same stock down 70% years later, and you still refuse to sell. Not because the business is great, not because the numbers make sense, but because your mind is trapped by one single number you saw on day one. That number? The IPO price. This is the hidden psychological trap that silently destroys more portfolios than bad math ever could. An IPO isn't just a stock launch, it's a ceremony. There's hype, media tours, big promises about changing the world. It feels like opportunity knocking loudly. When you buy an IPO, you're not just buying shares, you're buying a story about the future. And embedded in that story is a powerful psychological anchor. This is what the company is worth. That first traded price becomes the reference point your brain refuses to let go of. Not because it's rational, but because the human brain craves certainty, even when it's wrong. This is emotional anchoring. It's when your brain latches onto an initial number and uses it as a shortcut for every future decision. In investing, it sounds like this: I bought it at 40, so it'll come back. Or, it used to be valued much higher. That anchor isn't just a price, it's your identity at that moment. You remember how confident you felt, how smart you thought you were. Selling below that price doesn't feel like a decision, it feels like admitting you were wrong. And the brain hates that. Here's the uncomfortable truth. IPO prices are often the least reliable prices a stock will ever have. They're shaped by marketing narratives, investment bank incentives, and short-term excitement. But emotionally, they feel official. This is the starting line. Except the market didn't agree. It barely had time to think. When the stock falls, investors don't reassess the business. They compare everything back to the IPO price. Not to cash flows, not to competitive realities, just the anchor. This trap is locked in by a few predictable biases. First, anchoring bias. Your brain says, if it was once worth this much, it should be again. But markets don't care about your entry price, they care about today. Then there's loss aversion. Losses hurt about twice as much as gains feel good. So instead of asking, is this still a good investment? You ask, how do I avoid locking in this pain? Not selling starts to feel safer. Finally, confirmation bias kicks in. You stop looking for truth and start looking for hope. Bullish tweets, optimistic interviews, anything that confirms, I just need to wait. Slowly, you stop managing money and start managing emotions. This is where it gets dangerous. The internal dialogue begins. It's only a paper loss. The market doesn't understand the vision. I'll sell when it gets back to my price. Notice something? The business is gone from the conversation. What remains is you versus your past self. Selling now feels like betraying the optimistic person you were on day one. So you hold and hold, not because it's smart, but because it's emotionally easier. So, how do smart investors escape? They kill the anchor. They ask one uncomfortable question. If I didn't own this today, would I buy it now? If the answer is no, the anchor is irrelevant. They separate ego from capital. Selling isn't failure. Holding a bad investment out of pride is. They re-anchor to fundamentals, revenue, margins, cash flow, and they use rules, not feelings, to guide their decisions. Most IPO losses don't come from bad luck, they come from delayed acceptance. Every day you hold a stock for emotional reasons, you're paying an invisible tax, opportunity cost. That capital could be growing somewhere else. Instead, it's frozen, anchored to a memory. So here's the real question you have to face. Are you investing based on what is or defending what once felt right? The moment you stop anchoring to IPO prices, you stop investing emotionally and start thinking like a capital allocator. The market doesn't reward loyalty, it rewards clarity. And clarity begins the moment you let go of the anchor. Remember, the most dangerous number in your portfolio might be the very first one you ever saw.